Welcome back, everybody. Sorry, I'm a little bit late. How's everybody doing? Hopefully everybody had a great trading week, especially today. Gabe Velazquez here with you, transparenttrading-solutions.com. So, yeah, we quite a day today, right? Algorithms, Fed, all that stuff we talked about last week. Sorry, I'm a little bit late, guys and gals. Yep. So real quick, everybody, pull up your charts. And what's going on today is, again, we talked about. I think Dennis and I were discussing the other day. Yeah, markets were at daily, demand and all that, and I kind of mentioned the fact that okay, so that's okay, but with what I've been writing about with inflation, with the Fed still tightening, the old "don't fight the Fed," all that kind of stuff. So that came to fruition today, and a lot of what drove the action. Hi, how you doing, Robert? Glad to see you in here. By the way, guys, again, subscribe to the channel if you're new. There's a couple of links down below. I'm still offering that basically five live sessions with me in the morning for free. If you guys just want to give it, just kind of, I will go through the charts. I give you a bunch of levels and so forth. So if you're interested in that, just hit the link. That's to my support. Just say I'm interested in, joining Gabe for 5 free sessions, and we'll hook you up for that. I also have a class coming up next Thursday, so you can sign up for that. That's also, all this is free stuff, right? So in any event, let me get through that. Pull up your charts. And again, we did talk about, so I want to focus on this morning before the Fed, before Powell gave that brief speech. And again, if you go back and look at the recordings, this is also important because everybody, I'm getting over 100 and some odd views, obviously here live is we have not that many people, maybe 10, 13, whatever. But I mentioned the gap, right? Yeah. So remember I mentioned the gap briefly, and I said there's a gap from last Sunday. And guess where we bumped up against this morning after, as the market was going up for the last couple of days, right? So, it's really important working around that gap. And in fact, this is where it gets a little bit tricky, because if you look at the gap on the S&P, it didn't actually quite fill the gap. So you guys know I'm not big on traditional stuff. The gap actually is 42.20 to 42.27. That came in last Sunday on the futures on the S&P, and then there's a similar gap on the Nasdaq. It went right close to even tagging that, and then just obviously fell off fell off really sharply today. So it's really important that you guys pay attention to these gaps. And I used to call that, I don't know if you guys remember, call that working around the gap, trading around the gap or whatever. So that's really important. So again, and part of the momentum, the strong momentum you're seeing in the markets right now, by the way, think about it. We have, it's a summer Friday, right? It's a summer Friday. It's a very light volume. And so you got algorithms more or less running the show, right? I think I've mentioned this the other day as well. And so when you have very light volume and algorithms pushing this thing hard, that's the kind of momentum you're getting. So you're getting a ton of momentum. Yep. Well, that, and again, if you have a thin market, Robert, you know what happens in thin markets, right? So thin markets can be manipulated, if you will. Exactly. So that a lot of that is coming together today, right? All the volume and whatever. So rate hikes. Yeah, Robert, I can't get, I don't have the time to explain exactly By the way, if you're not subscribed to my newsletter, I've been writing about this for the last 3 weeks. In fact, I always point. I know, guys. Dennis gets my newsletter, but what was it, about 3 weeks ago? I ended my newsletter by saying, and this is when the S&P was right up against the highs. I said, this is the time you guys sell some calls, buy some puts, get some protection, because I was talking about the VIX under 20 and so forth. So now we've, and again, everybody was starting to get super bullish at the highs. Yep. And now we've come full circle. So that's all well and good. Yeah. So going forward, in fact, we are pausing as we speak at an accumulation level 40, 58, 40, 47. Check it out. It's a rally-based rally on a 4-hour chart in the S&P. And notice how we're stalling out right there. Could we rally from here? Obviously, it's the end of the day. It's Friday. We'll check it out on Sunday. Now, going forward, the daily level comes down around, bottom line, around 4K, right? 4,000 on the S&P. So I do suspect we're probably going there probably next week. We got non-farm payrolls. We got the end of the month and so forth. Okay. And then Labor Day, and then all the volume comes back in. So there's still going to be a lot of kind of volatility and this type of momentum next week, because the volume is still going to be somewhat light and going into the holiday. And just a quick reminder, and I'll remind you guys on Tuesday. I'll be back on Tuesday. We will have remember the going into a U.S. holiday. There is a bullish slant to the stock market. So keep that in mind. I'll remind you on Tuesday as well before the Friday. Okay. All right. So 40, for all intents and purposes, if you look at your daily chart of the S&P futures, look around the 4,000, there's a daily accumulation. Could we bounce on Sunday off of the one? We just basically landed on that as we speak. I don't know if you guys can see that on your charts, but check it out. Okay. So that's kind of where we're at. And then obviously now, again, I'm going to do a class on trend anticipation or anticipating where the trends are. These sell-offs always leave, supply behind, the distribution. And so if you're waiting to engage the market on the short side, now you're going to have to be patient and wait for a bounce. Just like I was telling people, don't short the market until we get up to these major distribution areas, like the NASDAQ. If you go back and check out my recording from a week and a half ago, I gave you guys a level on the NASDAQ, 13,700, 13,788. That's where the market peaked, right? That's trend anticipation. Don't chase the up move, buy low, sell high. So now where we buy low on the NASDAQ, and the same gap applies here on the NASDAQ, and it's been the underperformer. We got some levels down below around the 12,300 area that I'm looking at now. Okay, so to sum this up, just to kind of wrap up with the equities, clearly we had some downside momentum today. Is this the beginning of a test of the lows? I would say probably not, and here's why. So this is fascinating today. So, and I'll ask it as a question. How many, we got about a few people in here. So I'll ask you this as a question. Can somebody explain to me, with Powell being as hawkish as he was, basically saying, doesn't matter if we throw the economy into recession, short-term pain, long-term gain, blah, blah, blah. They're basically going to keep their foot on the pedal. They're going to keep tightening and raising no matter what until they put a stake in the heart of inflation, so to speak, right? Okay, so with all that, can somebody explain to me why bonds rallied today a little bit, or bonds didn't go down? That's a question. Did you watch the bond market today? Well, Dennis, if inflation expectations are high, what should the bond market have been doing today? Should yields have stopped going up, or should they start going down? What do you think? So where am I going with this? If you look at the 10-year, it barely budged 117. In fact, we were trying to get long the 5-year and couldn't even get filled on that. Right? And so what does that mean for the stock market? So let me ask you again, if bonds rally next week, should you get extremely bearish on the stock market right now? What do you think? I don't think so. No, Gallo. If bonds rally, what's been driving the Nasdaq lower? Is it higher yields or lower yields? The Nasdaq in particular, really sensitive to interest rates. Again, put your charts side by side and check it out. Right? So my point to everybody is, and again, we're going to leave the bond market. Lower rates, i.e. higher bond prices, are going to translate into what in the NASDAQ in particular? In other words, do lower rates help the NASDAQ or hurt the NASDAQ? It's an inverse correlation. You get the point? And again, don't take my word for it. Just take, if you're in front of your computer right now, do me a favor, check it out. Put your charts side by side. Just put a chart of the NASDAQ futures side by side against the 10-year note futures. Yep. So I would not get overly bearish right now until I see what the bond market's going to do next week. I've been telling you guys this. Yeah. What did the 10-year do in the early part of this week? Again, I'll ask you as a question. Check out your charts. What did the 10-year what's it been doing? Right. And so what happened to the NASDAQ? All right. So bottom line, I got to move on. Right. And I'm going to say a little bit later because I came in a little bit late. Okay. Look at the 10-year and the 30-year. And in fact, the 30-year, we're in the TLT again. I've been talking about this. I'm going to give you some positions, right? TLT, we're in another volatility situation in options in TLT. We put that on yesterday, right? We're also long wheat. I think I mentioned that the other day. We have finally got long wheat, and we're long soybean futures, right? We bought soybean futures yesterday at not to say that we don't have losing positions clearly, but we haven't really had that many lately. So if you're interested in we bought soybeans 1434.5. Look at your chart on that. So we went long yesterday, and we almost got stopped out, by the way, last night. But we hung in there and we closed right on the high. So we're up pretty nicely on that trade. And then we also got long wheat as well via the WEAT options. So just so you guys track what I'm doing here with that. And I'm trying to get long gold. Those are pending, and I'm trying to get long oil. Okay, I've been talking about this, but we're being very super patient on that. Okay, so the dollar. Let's move on to the dollar. The dollar has been all over the place. As I mentioned on Tuesday, we hit a high of what that prior high of 109. Um, what was that? Yeah, so the dollar is going to be another key piece, right? Because it drives. It's been driving the currencies, obviously, and also the metals. So gold, in particular, gold, silver. You saw gold tank today. So 109. That prior high, 109.68 was the high. Rough 109. I'm sorry, 109 30 28. 109. Yep, that was the high. And we actually came down and hit an accumulation. If you look at it on your 4-hour chart, 107.68 today, and we're trying to head back up again, but it still failed to make a new high. So that's another kind of interesting kind of development today, where you would have expected, with the comments coming out of the Fed, you would have expected the dollar to just soar and make new highs. Would you have not? Does that make sense? And yet, what's happened? The dollar did rally, no question, but it has not made a new high yet. So that's going to be another piece going into next week. Okay, so check that out. I also have a few currencies I'm looking at. Canada, in particular, I've been talking about yen. The euro and the yen. The euro has broken parity, 1-to-1 on the dollar, and it's kind of just bouncing around between, parity or one. It's kind of just chopping around right now. So that's going to be really interesting to see. But watch the bonds and watch the dollar for kind of a signal on the stock market. So next week's going to be really, really fascinating. Nothing new on the dollar, really, just kind of hovering about, right around the highs. As you guys, if you look at your chart of DXY, I would just say right now we're kind of establishing a bit of a range here, 107.75, 109, and it's going to be really fascinating to see if we can break up next week. I think that's going to be another key piece here for equities. Bonds and the dollar as well. Okay. Yeah. On the again, back to energies, because obviously energies are very, very important. They're probably the number one inflation proxy that you can look at, and I'm also of the view that if oil starts heading back up again, which oil has been somewhat well behaved, it's been kind of just hovering around this 93, 95 area. It's actually established a new range. I would say, if you look at the charts on oil, I would say the lower end is clearly around 85, I'm sorry, and the top end is around 97. So as long as oil stays in there, I think it's going to be. I think equities are fine. Now, if you're going to get really bearish on the stock market, also look at oil, because if oil starts surging and goes above $100 a barrel next week, that will also be a kind of a headwind for stocks. Okay, and to that end, explain to me why nat gas at 9.5 MBTU, 20-year highs. I think the last time we were up here is 20. Well, not 20-year highs, but I think it's been multi-year highs since we were up at 9.5. How come the market didn't sell off hard with nat gas being as high as it is, right? So nat gas, more of a European thing, right? Because you guys know Russia's been weaponizing, or it's probably going to get worse. They're weaponizing their nat gas against Europeans because of what's going on in Ukraine and so forth. So it's going to be interesting to see what happens there. But on a chart, nothing really to discuss on nat gas. Again, you can look at that chart and you can see there's a consolidation in nat gas, just around that 930, 950, and it's been very, very volatile, as I mentioned. I am looking for, if it breaks 870 on the October contract. Look at your nat gas futures contract. It's kind of putting in a little bit of a topping formation here. In fact, if you look at the 30-minute chart of nat gas, it actually had a level at 967, 977. And it came up there and fell off, but it hasn't really had the momentum to break 870 yet. So all in all, I think, nat gas is kind of just chopping around in here. And interestingly, we'll see if it can break to a new high, because if you look at your monthly chart of nat gas, 10 is the next level. I think I mentioned this the other day, 10, and then, all-time highs is really around 15 in nat gas. Not nat gas, Dennis. Remember they're that pipeline. In any event, that's just the fun, and again, do fundamentals matter? I've been talking about this, right? Fundamentals absolutely matter in regards to these commodities. So right. Well, they have to, Dennis, because of, because they know. And by the way, December, you know what December 5th is? Jot that date down. That's still a long ways away, but December 5th is when they have to decide whether to put sanctions on Russian oil. Yeah, so that's also another kind of big catalyst for the energy markets. That's not until December. December 5th is actually the deadline. So write that down if you're interested in that kind of stuff. Okay. All right. And then, I just mentioned the grain markets. If you've been watching, beans and corn and wheat, and I did make mention, last Tuesday, that looked like wheat is bottoming out. It's gotten crushed, as we know. It spiked back when Russia, initially when Russia invaded Ukraine, went all the way as high as this is wheat I'm talking about. Had that massive rally up to about 13 a bushel, come crashing down, sitting around 775. But again, coming full circle. And as you guys know, weather has been, there's droughts everywhere. There's, and look at soybeans and corn, they've all been kind of creeping higher. So there is a fundamental, again, just juxtaposition for higher prices, along with the charts. All you got to do is look at those weekly, monthly charts, especially on wheat. And you can see that is the origin of the monstrous move we had back in March, when Russia invaded Ukraine. And so it's just the basic, right? The origin of the move, how far has price moved away before coming back, and all that good stuff. So we've come full circle on that, and that's part of the rationale why we got long at TTS. We got long on the wheat market. Okay, so we got long wheat, soybeans, looking at corn as well. And possibly some currencies as well, and trying to get long gold on a gap. There's a gap on gold as well. So, okay. You guys have any questions before I? So in a nutshell, guys, obviously big sell-off today, big negative response from the Fed, and a lot of algorithmic trading. You can clearly see, anytime you have this kind of momentum, like you see at the end of the day, is a lot of algos because of the thin volume. So keep that in mind as well. It always exaggerates the moves. Okay. And you got this thin volume. You see that in the Globex session too, by the way. You ever notice that in the Globex session, right around London time, you get these kind of big momentum type of moves. That's again due to the lack of volume. So it's going to be interesting. Again, looking at 4,100 on the S&P, we probably get there. I'm sorry, 4,000. Sorry. Yep. To the next daily accumulation. In the meantime, we've got some levels working. This sell-off created some really nice distribution levels that's short against. So I'll be putting those out in my market methodology sessions. I do one on Sunday too, by the way. So if you're interested, again, I'm going to wrap up now. If you're interested in joining me for 5 sessions free and kind of just, obviously you'll get some levels out of me and whatever, kind of get a sense to what we're doing, and a few rants here and there too, by the way. Remember those? Sign up down below. Just tell my support staff you want to take advantage of the 5 free days. And also, again, Thursday class is coming up. You can sign up for that as well. I think that's going to be a really important class. Trend anticipation. So you're not getting caught chasing the trend like most people do, right? Know when the trend's going to reverse before you jump in. Don't chase it. Okay. All right, everybody. Have a great weekend. And if you need to contact me again, contact me at transparenttrading-solutions@gmail.com. If you want, if you have some requests or whatever, also contact me there, or private message me on Twitter. If not, have a great weekend, everybody. And again, sign up for the channel. I'll see you guys on Tuesday. So I'm going to do this regularly, so you know when to come in if you want to do it live, right? Every Friday at the close and Tuesday at the close. Okay. All right. Have a great weekend, everybody. Take care.